Welcome, guys, to Meet Damien's live stream here. I am Damien, and today's live stream is pretty important. We're going to be taking a look at the Federal Reserve meeting. That doesn't start, well, we won't get the interest rate decision until 2 p.m., about, 52 minutes from now. Okay? I'll be live streaming for like the next couple hours, so we'll actually take a look at the Federal Reserve meeting later on when that starts, and I'll turn the music down so we can actually listen to what Jerome Powell has to say, and then I'll give you my thoughts about what he has to say in his Q&A here. Okay, when the reporters ask him the questions, I think the key thing that we're looking for right now is we're looking to see if we all know they're going to lower interest rates, okay, or they should be lowering interest rates. If they don't, then oh my god, that's going to rock the markets more than anything else. But what we're keying on is, are they going to continue cutting rates? Are they going to give us hints that they're going to cut rates next month and in the month of December? I think they have another meeting as well, and then we need to see if they're going to actually do quantitative easing, which also is going to help send prices up higher, but it's also going to help keep interest rates lower if they do quantitative easing. All right, and then what else? I mean, that's pretty much what we're looking for, is quantitative easing, and then also we want to see if they're more worried about the jobs market rather than inflation. Because if they're more worried about inflation, then we're probably gonna get a little dip here, and that could signal that we're not gonna get another interest rate cut for next month if they're still worried about inflation rather than the jobs market. Kind of important thing that we have going for tomorrow is we are going to get another reading on unemployment claims, and unemployment claims could dictate, whether or not we're going to get another interest rate cut for next month. Okay, but yeah, that's what we have going forward here. But today is one of the most important days. It's Fed Day, as the title of the video says, and we're gonna see what could happen next year with Bitcoin. Okay, my opinion though, with Bitcoin is we could get like a 2,000 point move in either direction. I think Bitcoin could climb up to $117,000, $118,000, a 2,000 point move, or we could drop 2,000 points depending upon what Jerome Powell says during this Federal Reserve meeting that's coming up in like 50 minutes from now. We'll get the decision, and then around 2:30 p.m. Eastern time, he'll actually start talking to reporters about why they made that decision and what they plan on doing next. And that they're also going to do a dot plot, which gives us some direction as to like where they plan on what they plan on doing with interest rates over the next few months. So that's going to help us figure out what is going on here with the interest rates here. Cursing is in the chat. I see you saying that it seems negative today. We're getting a little bit of pullback. There might be a little bit of nervousness about what we're going to exactly get here from the Federal Reserve. But I just view it as buying opportunities. As a matter of fact, I actually went into a few longs myself on Mexi Exchange here. Let's see how they're doing. I got into Pepe and Solana and Bitcoin. And Pepe is up right now. My Solana long, which I got in early this morning, that one's a little bit down right now. And my Bitcoin long is actually up right now, just barely. Okay, market's kind of like trending downward, which is understandable, and trending downward and not really doing much. We're probably gonna get the volatility in the next hour. Okay, but if we do get that volatility, I do have an Ethereum short ready to go. If the price pushes up for any reason up to like $4,500, actually $4,540, I'm ready to short Ethereum, and I have a stop loss at 45.60. Okay, because I don't really want to risk too much. Okay, if I'm wrong, but if we do push up and then they send us down, I'm gonna try to see if I can catch that. Where my stop loss is at 45.60. I only lose about $17 on that trade, but I'll try to take that Ethereum short all the way down to like 4,300 bucks. And that will give me about $204 payday if I can actually do that. Okay, so I got Ethereum short ready to go. The other thing I can do here on MEXC is if things really look bad, if Jerome Powell gives a good scare and the market starts dropping like a rock, I could do a close in reverse here, where I can reverse my trade, and you know, instead of being long, I can be short on these trades here. Okay, that's one thing that I can do. So actually, I can click that reverse button, and it will turn my long into a short. Okay, right away, immediately. Like it'll do a market order and sell the long, and it will go into a short immediately. If things get really bad on the volatility here. And I can also move my stop losses. Like right now, I'm in profit on Pepe, and I think right before the meeting starts, in like 30 minutes, I'll move my stop loss to break even. Right now, I'm in profit, but I can ensure that I'm not going to lose any money by actually going in here and typing in, you know, my break even price, which in this case, it's 107.43 on Pepe. So if I put that in, I'll lose no money on that trade. Okay. If things start, you know, going south here on my Pepe trade. But yeah, I'm in a Pepe trade, a Solana trade, and a Bitcoin. I'm sorry, a Pepe long, a Solana long, and a Bitcoin long, ready to go if we get the good news here. And I'll try to break even, and so I don't lose any money on my Pepe trade. And I'll probably reverse the Solana and the Bitcoin long if things are very volatile and we're going down instead of up. Anyways, that's a little bit of what I'm trying to do today with my trades. What do you guys have for your trades? What are you guys in today? I know John316 loves to talk about Cronos and ZBCN, and I'm a little bit curious if he's in any other longs or trades besides that. Let's see what we have here for my TikTok guys. Miscalin, I was using MEXC there. That's a cryptocurrency exchange. Has some of the lowest fees in the game, and you can see that's MEXC right there. You go ahead and log on to MEXC and open up an account. And if you're in the United States, you're gonna probably have to do a VPN because they don't really work with United States customers unless your IP address shows that you're out of the country. All right. Let's see what else we got here for some questions. What leverage am I using? Oh, okay, Lucas. Yeah. So I usually do about like 20 or 30x leverage. However, on my Bitcoin long, I do it 100x leverage only because Bitcoin doesn't really move as violent as some of the other altcoins. So just to get some little extra oomph in my trades here for Bitcoin, I do 100x long on my Bitcoin. But what I do for the stop loss, you know, I still only plan on losing about 20 bucks on my stop loss. Like my stop loss right now on Bitcoin is at 115,200. I only lose about $23, even though I'm using 100x leverage. And if Bitcoin does climb up to 117 grand, I'll make $84 on that trade. So I'm only risking 23 bucks to try and make 84 bucks here, 84, 85 bucks. All right, let's see. What is John talking about over here? John says he's just an investor, not a trader, and you love your Latinas as well. Okay. All right. Miscalin is asking about the Dow. You want to take a look at the Dow Jones? We can take a look at the Dow Jones. See how that's doing today. And let me see. Kame, I think I already updated you about the interest rate cuts. We're not going to get the decision until 2 p.m. Eastern time. And then 2:30 is when Jerome Powell will show up. And then if you stick around for the live stream, I'll actually try to watch that with you guys here. I'll turn the music down and we can watch what Jerome Powell has to say. But anyways, let's go back to what the Dow Jones is doing. Let's see how the stock market's doing today. I think there's a little bit of sell-off in the stock market. Actually, the Dow Jones is up. Dow Jones is currently trading at 45,900 points. Man, I remember this thing used to be 10,000 points when I was a kid. Okay, and this thing's at 45,000 now. Alright, so Dow Jones trading at 45,972, up 0.47% today. S&P 500 is down slightly, down 0.2% at 6,593. NASDAQ is also down slightly, 0.54%, and trading at 22,212. But right now, you said let's look at the Dow Jones. Dow Jones is on the bull trend. We've been in a bull run ever since April, after we got clarification about what Donald Trump's doing with tariffs here, and they did a 90-day pause on tariffs, and we got above the 2-day moving average. So once we get above the 2-day moving average, in my opinion, you can be bullish on whatever asset you're trading. In this case, if you're trading the Dow Jones, you became bullish in June of earlier this year. And the moving averages, you're well above the moving averages, which is good to see. That means you're bullish. However, if we start getting a correction, a recession, or anything bad happening here to the markets, we have a long way to go before we get some support. The 50-day moving average could act as support at 43,600. That's about a couple of thousand-point move down. That's almost like, I believe that's like a 5% move down if we measure that out here real quick. If we go right down to that green line, the 50-day moving average on the Dow Jones, that's about a 5% move down. Okay. But I don't know if that's going to happen all in one day. It'll probably take a few days for it to get down there. Ideally, I think we could drop if the news is bad today. If somehow they mess things up and they don't give us an interest rate cut, or if they give us an interest rate cut and they say that they're more worried about inflation than they are the jobs market, then we could drop probably down to this level here at 45,000. We could lose about 900 points on the Dow Jones. And that looks to me to be about like a 2% move down in price if we come down there. So I think both Bitcoin and the Dow Jones could do like a 2% move in either direction. Bitcoin could go down 2% and go down to like 113K. And the Dow Jones could lose 2% as well and go down to like 45K. Miscalin is in Europe. Wow. Okay. And Mario is saying better be safe and have positions. Yeah, I'm already in my positions right now on my crypto. I am longing because we took a dip this morning, so I want to take advantage of the buying opportunities. Because if we get good news and the market likes it, then I could get rewarded pretty well here. I'm in a Bitcoin long, Solana long, and a Pepe long. And the Pepe long is still in profit right now. The Bitcoin long kind of went down a little bit, and Solana I entered earlier. I probably could have got a better entry, but that one's also down as well. But if we get the good news, this could all turn green in like less than 1 minute. And I got my stop losses in place, and I also have an order in if we push up for any reason and then come down. I do have a short on Ethereum ready to go if we get up to like 4,540 on Ethereum. I have a stop loss at 4,560. And the reason why I did that, let me just get into Ethereum real quick here. Looking at the 15-minute chart here, I will open up a short here at 4540 because this is like kind of a high watermark here that we had earlier this morning. We saw Ethereum at 4540 and 4550. So if we go back up there, right, and then come down, at least I'm getting a nice short position at that level. Okay, and if we do come up here and it triggers and we keep going up, my short, I'm only going to lose not that much here because I got the stop loss at 45.60. If we get up to like 45.60, then you know I think the market wants to go up rather than go down, and I don't want to get punished on my short here with Ethereum. But this thing hasn't even triggered yet. This is ready to go in case we launch up for any reason and then come down. Alright. However, if we just immediately come down today, you know, after they do the decision and Jerome Powell gets on the podium and starts talking and the market doesn't like what it's saying, well, what he's saying, then I can just immediately reverse the positions here so I don't lose my money, and I can just follow along with the market. If we're gonna go down, I can turn these longs into shorts by clicking that reverse button. Reverse, reverse, reverse. Alright, going back to the charts here. Yeah, so I'm mainly in longs right now. And I'll put my break even. I'll put one of my stop losses on Pepe at break even. Let me just get back into that again. So Pepe right now is still in profit. And I don't want to move the stop loss right now because sometimes the market can go in, stop you out, and then go up in the direction that you're planning on. I think when we get closer to the decision around 2 o'clock, I'll actually move my stop loss to break even, so I don't lose any money on my Pepe long here. Right now I got a stop loss. I could lose $22 if I get stopped out on my Pepe. However, if I bring that up to like 107, like 3, I'm sorry, no, it was a 107.42. I won't really lose that much money on. I'll just break even on Pepe. Yeah, 107.43. I'll just break even on it. I could even bump it up a little bit so I actually make a little bit of money. I can make like $1 so I can pay off the exchange fees. But I kind of want to hold off on that for now. I'll probably make that adjustment. Like, remind me, guys, 30 minutes from now, I gotta move my stop loss on Pepe. All right. You guys have any coins you want to take a look at, or stocks? Oh, someone's getting all discouraged now. Someone's mad that I didn't read his comment, and then he said bye. Okay. How you doing, Fabian? What's your question here? What do I prefer? I don't know what do you mean by what do I prefer. Right now, I myself, I got into longs right now because we had some buying opportunities. Like, we had a dip, you know, over the last few hours here. We saw the price of Bitcoin kind of, well, the price of Bitcoin last night went up to like 117K. And then we started dropping, and I was like, all right, we're at near the 50-day moving average. Oh, sorry, we're near the 50 moving average on the 1 hour time frame. This could be a buy zone. All right, because it looks like every time we come down to the 100 moving average, this blue line, we end up bouncing off of it. So I'm hoping that we just do the same thing here and we bounce off. If not, I could put the stop loss really tight at like 115,300 or 200, and I won't really lose that much money on my my Bitcoin long. Okay, but I just think it's prudent to be in longs because we already had a drop. Okay, and you just put your stop losses really tight right now on your longs. I'm also in a Solana long as well. And on the 1 hour chart here for Solana, we're down here at $233. And I just put my stop loss below the candle wicks and below the 200 moving average on the 1 hour time frame here. I think I got my stop loss at like 232. But you gotta be careful on Fed Day and anytime they have like inflation, CPI reports and unemployment reports, because the market does move, and I could easily get stopped out, and then the thing launches up to higher prices. So it's kind of like one of the things you have to just, part of the cost of doing business as a trader is you could get stopped out and still be right. I see DZ's in the chat. DZ's got a request for AVNT. I think that's Avant. I'll take a look at that for you. And then Kami wants to look at Ray. Oh, wait. Can you look at Coin? Alright, yeah, Coin. So you want me to look at Coinbase, the stock, right? And then Antonio wants me to look at Ethereum. So let me start writing these things down here. So we'll look at Avant first. Then we'll try to look at, I believe that's Coinbase you're asking me about. And then Ethereum. Alright, I got you guys. D2 Miami, how you doing, bro? It's good to see you in here. Alright, Kami, what's the ticker symbol? What do you want me to look at? Let me move on to Avant here. And I believe it's the Avant crypto that we're going to take a look at, right? AVNT. If not, just tell me, because there's an Avant stock as well. I can do both, either one. Just let me know. I'm gonna assume that you want to look at the crypto though, because you're over here talking about cryptocurrencies. All right, so we're looking at Avantis. Currently trading at $1.01 here. Let me get into the daily time frame. Alright, yeah, so this is a brand spanking new cryptocurrency. I think I've seen it started trading on Coinbase this week, and it caught my attention because around here on Monday it went up 52%. That definitely caught my attention. And then here on Saturday we went up 67%. I'm not sure what this crypto does, but what I noticed with cryptos is that they do shoot up, especially after they get listed on exchange, and then they start coming down. What I'm starting to worry about with Avantis is that you already started coming down already. And if we just do a quick Fibonacci on here, it says that the 618 is at $1.06. You kind of already came down to that already. Looks like today you came down as low as 90 cents, and yesterday you came down as low as 90 cents as well. And that's the 0.5 retracement. So you already did a 0.5 retracement. Traders probably eyeballed that level, and they decided to bring it down to that level, and then they came in and they bought it back up again. If we are bullish on this asset, if this asset's going to continue going up to higher prices, then you'll probably see some resistance here at $1.30. That's where your 786 retracement's at, and if you look at that, that's actually where your candle wick high was on Tuesday. And then if we're able to push past $1.30, then maybe we can revisit the $1.60 level that we saw back here on Monday. And if you're going to be extremely bullish and go past $1.60, then you got the 1272. There could be some resistance at $1.98, and then there could also be some people taking profit at $2.47, which is where the 1618 is hanging out at. Those are your upside targets. Now, downside targets is that if we do decide to go down lower, you got the 0.382. We could come down to 73 cents. And then you got the 0.236 saying that we could come down to 53 cents for a deeper retracement. Obviously, if we're bullish, we're not going to go down there. If we're bearish, if we get some bad news, Federal Reserve doesn't help us out with interest rate cuts, then we could come down to that 53 cent level for Avantis. I see Lauren A's in the chat. Good to see you. Alright, let's go on to some of these other requests here. Let's see, what did Kami say as far as, you want me to take a look at Radium? Is that the request? Ray? You can take a look at Radium. And then Miss Colin wants to look at Monero. Alright, got it. We're gonna now move on from Avantis to Radium. Alright, Kami, you want to look at Tau as well? Okay. We'll put that one at the Monero. And then D2 Miami, is that a request for Demo? I guess we're putting in the request right now. And then I got one here for Moonday. Alright, we'll work on those. Thank you guys for the requests. Don't forget to hit the like button, especially if I'm giving you some good TA here on your coins. That's the least you can do. One more, Cardano. Okay, I got Cardano coming up as well. Alright. Alright, let me get started on here. Let's look at Raydium for my buddy Kami over here. So we're looking at Raydium currently trading at $3.21. Almost like indecision candle here on the daily chart. Not really doing much. Now you're up. Okay. But you're getting a candlewick high and a candlewick low below you and a small body right now on Raydium for the daily candle here. You've come down from topping out here on Friday at like $3.73. Let me just zoom out a little bit, try to get ideas like what this thing has done. Oh, I have looked at this thing before as well with a Fibonacci. So you're above the moving averages. That's good to see. Especially being above the 200-day moving average, I can be bullish. I could be bullishly biased towards this asset because you're above the 200-day moving average, and you're also above the 50-day moving average as well. So that's good to see as well. You're also making higher lows compared to the low here on June 22nd, where we saw this thing as low as like $1.73. So you're in an uptrend. That is very good to see here for Raydium. Okay, so far so good. I'm liking what I'm seeing. All right. The only thing that is of concern is you are making lower highs now. Okay, so you got a downtrend on your lower highs here, and that is just putting you into this symmetrical triangle here. Okay, and all it is it's just confirming that you're consolidating right now, anywhere between $3.20 and $3.70. I think you can, comfortably put yourself in a long here and then put your stop loss right below this uptrend line here. And if you get stopped out, that means you're losing the uptrend and there might be something wrong with this asset, and you're not going to lose that much money just putting your stop loss somewhere below this uptrend. Okay, let's see where this thing could possibly go. I'm going to do a Fibonacci, see where just measuring from this swing low to this swing high. We'll see what the Fibonacci has to say. That's like what key levels we should be looking for here. Key level to pay attention to is 0.382, is at $3.07. Did we actually come down to that level? Looks like we came down to that level back on August 22nd here, or close enough to it. That's the level to be paying attention to. You might be able to scoop up some cheaper Raydium around $3.07, $3.08. If this thing does start going up later on this week, we could see the 618 at $3.47. That's not too far away. And then we'll see if we can get back up to the 786 at $3.76 here. But if we're going to be bullish, then you would think this thing would at least get back to where it was here in August, and we got up to like $4.11 here. Alright, so I think that's going to be your short-term swing trade take profit target, $4.11 or 12 cents, if we're able to get back up to that level again. And if we get past that and we're still bullish, there's a 1272 at $4.58, and there's a 1618 at $5.17. Those are your upside targets for later on in the future, and I bet you that kind of coincides with the previous price action back here in February. Yeah, people back in February were buying Raydium at like $5, so they'll probably click the sell button on you if we do get back up to $5. All right, so I think $5 is your long-term swing trading target for Raydium here. All right, so that's upside targets for Raydium. Downside target, I did mention 307, but we have a 0.236 level here at $2.83, which is kind of confluent where the 100-day and the 50-day is sitting at. So the 100-day and 50-day could be where this thing comes down if we end up losing the uptrend here on Raydium. All right, moving on from there, we'll take a look at we gotta look at Ethereum. All right, we'll take a look at Ethereum. Ethereum currently trading at 4,493. And I'm looking at the daily chart for Ethereum. Ethereum could possibly be making like you know, somebody might say this is a head and shoulder pattern, right? Left shoulder, head, right shoulder. And if that's the case, then that's a bearish pattern. That means we're going to probably break down to the downside. If we do break down to the downside here on Ethereum, I do think like 4,000 is an area where it seems interesting enough that anytime we come down to 4,000, we get bought up real quick here. So I'm expecting Ethereum to get bought up at the psychological $4,000 level here. However, if that level doesn't hold, then we got the 50-day moving average sitting at $3,600, which is kind of confluent with the 786 retracement. So I think $3,600 could be where Ethereum goes down if we're going to be bearish. If we're actually gonna drop down in price here, and that $3,600 level is a price where Ethereum was trading at in the month of July. So anybody over here, they're not gonna sell because they'll just be at break even. So there'll be less selling pressure if we do come down to that green 50-day moving average. There'll be less selling pressure at that area. So if you're trying to short Ethereum, you could take it down to the 50-day moving average, and I would say take profit in that area. Okay. If you're trying to buy some cheaper Ethereum, $3,600 is also a good area to try to buy some Ethereum. But we first have to break through, you know, psychological $4,000 level, and we also have to break through $4,200 where Ethereum was trading at almost like, for the most part, the last couple of weeks here. So those are your downside targets for Ethereum. Upside target, if we're going to be bullish here on Ethereum, let's try to revisit the 1272 Fib extension level here at 48.74, and also get back up to that all-time high at 49.55. However, if we're able to push past the 1272 Fib extension level, there is a 1618 that says that Ethereum could get up to like 5,815 bucks. I think that's your near-term target going into next month in November. We could see almost a $6,000 Ethereum. Gabe Gonzalez is wondering if they cut or not. We won't get a decision until 19 minutes from now. They'll let us know around 2 p.m. Eastern time if they cut interest rates and how much they cut interest rates. Oh wow, it looks like Ethereum is jumping up right now as we speak. I might be able to enter my short on Ethereum. I'm just taking out a little head short on Ethereum, guys, since we're talking about Ethereum. I am targeting, wow, look at that. See this on the 15-minute time frame? You got a nice green candle here on Ethereum. However, I am ready to go to short Ethereum. I have an Ethereum short ready to go if we get to 45.40. And the reason why I chose 45.40 is because we were at that level earlier this morning on Ethereum when we saw Ethereum get to like 45.53. I'm going to try to short here, and I got my stop loss at 45.60. So it's not going to be too much of a loss if we start pumping through my short here, okay? But I am planning on shorting Ethereum if we get up to like 45.40. And if we do that, right? My stop loss, I think it's only gonna lose like 17 bucks here, right? Yeah, I'll lose 17 bucks if I'm wrong on shorting Ethereum. But I got my stop loss at 45.60, and my entry is gonna be 45.40, and my take profit on my Ethereum short, if it plays out, is gonna be at 4,300 bucks, and I'll make $204 on that short if it all works out that way. So yeah, we're getting a nice little pump here. I don't know if news is leaking out or someone decided that they're willing to take a shot on Ethereum right now. But yeah, Ethereum is pumping in the 15-minute candle here. Oh, you're welcome, Gabe. Yeah, my name is spelled Damien with an A, cause my dad wanted to name me Damien because he thought it was a cool name, and he didn't want anybody to be able to make fun of my name, so he wanted to name me Damien after the movie The Omen. If you guys ever seen that movie. But my mom also saw the movie too, and she didn't want those bad things happening, so instead of naming me with Damien with an E, she named me Damien with an A. So it's all A's, yeah, for my name. Kami says Ethereum's going to 5 or 6K. Alright. And, Gabe, what are you saying here? You mentioned a bunch of exchanges here. Coinbase, Robinhood, Crypto, Uphold, and Kraken. What's that all about? Blake is asking, where do you buy XRP? I'm actually longing XRP on another exchange here. So I'm actually in a couple more longs as well. But I think you can long, XRP right now. You can put your stop loss below the low of yesterday at 296, or even the low on Monday at 295. And I'm trying to ride my XRP long up to $3.30, the 786 retracement level. But if you're asking, like, where do you buy Ethereum, like, I mean, where do you buy XRP, like, on an exchange? You got to go to a cryptocurrency exchange. And I think that's what Gabe was trying to tell you. You could buy XRP on Coinbase. You could buy it on Robinhood, Kraken Exchange, Crypto.com. Miss Glenn, you like that? Yeah, my dad naming me after the son of the devil. Alright, let's take a look at Monero. We got a few more requests to go through here. Somehow we snuck in XRP there for a quick second. Let's take a look at Monero. Currently down 7.48%. What's going on here, Monero? Why so red? Let's see. I haven't gotten a request from Monero in a while, but I appreciate the request there. John316, you sent me a message on my Discord? Alright. Is it a PG related comment, or is it PG-13 or rated R? Because I don't know if I want to click on my Discord if it's rated R. Alright, so let's get back into Monero here. Monero has seen better days. May of 2025, we saw Monero up as high as like $418, and you've been making lower highs since then. Even like the high here on Tuesday still qualifies as a lower high compared to what you did here on July. So what gives, Monero? You can't go up if you're making lower highs. And then of course Monero ended up losing its 200-day moving average here in August. That red line there, you lost it, and then you regained it. You regained it like this past week here. But this is weak sauce in my opinion. I don't like this chart at all, to be honest. Because you lost the 200-day moving average, and you're also making lower highs here. You just now all of a sudden decided to try to be bullish again by getting above the 200-day moving average. I don't know. I put this in suspect territory. Okay. Even though it's above the 200-day moving average, I'm still worried that we're gonna lose the 200-day moving average all over again. That's at $281 on Monero. If we hold $281 and we do a nice bounce, then I would try to get into a long, or try to get into a position here on Monero and try to ride it up to the upside here. But I would put my stop loss right below that 200-day moving average, probably at like 264, or maybe below right here, the sideways trading action that we had towards the beginning of September. I probably put the stop loss at like 260. Because if we lose 260, then there's something wrong with Monero. You made another lower high. and you're going down and threatening to go down to where you did here in August when you got down to like 230, and it's just, to me, that's no bueno. Okay, so I put the stop loss at 260, and I'm trying to see if we're holding 280. If we hold 280, 281, hold that 200-day moving average, I'll become more bullish here on Monero. But then also I need to see Monero get above what I did here on Tuesday, get above 346, and then also get above this high here in July at 357. Because if you're doing that, then you're starting to make higher highs, and then hopefully making higher lows, and then you can say that you're in an uptrend on Monero. Yeah, I think those are your upside targets for Monero. Just, can you get above the high here on Tuesday, and can you get above the high here on in July at 357? Those are your upside targets for now for Monero. Yep, Zane, we'll take a look at Cardano. Cardano, you know, we have a few requests before that. We have to take a look at Tau, and then Demo, and then Moondang, and then we got Cardano coming up. All right, let's move on to Tau here. If you guys, I think at this point, and you know, I think I got enough followers here to start asking for tips. If you guys want to move to the front of the line on your requests here, then you can send me a tip here, and I'll put you in front of the line here. Because all these other requests, I'm doing this all for free here. But if you want to skip the line, then you know, you can send me a GIF, and I'll put Cardano first on the list. But right now we're looking at Tau, and Tau is currently trading at $346.11. And we're looking at the daily chart here. Tau has seen better days here in December. Making lower highs, kind of similar to like what Monero was doing. And Tau is wrestling with the 200-day moving average. That 200-day moving average is sitting at $342. We're just now getting above it. But this is also in suspect territory as well, because we have seen it go up above the 200-day moving average, only for us to lose it, come above, lose it, come above. But you can still game plan this out, right? Okay. You can put your stop loss below. If you're very conservative, you can put your stop loss below the low here on September 1st, where we got as low as $301. If you're day trading or leverage trading, maybe you want a tighter stop loss. Put that below the low here on Monday at 335. And if you're day trading, you're probably going to be targeting the moving averages above you. The 50-day moving average is sitting at 360. Could be a nice take profit target, and then 50-day moving the 100-day moving average above that at 373. That's another target for you to be looking for on Tau. And then you have some previous price action, some lower highs here to look for. $404 could be another target, and then back here in July, $460 could be another target as well. So you got some levels to work with here if you're long in Tau. Okay, downside, right? You just flip things over if you're gonna short it. Okay, probably put the stop loss, if you're conservative, put the stop loss above the last high here at $370. I put the stop loss maybe like 375 or 380. And if you're leverage trading it, well, you gotta figure out where you want to put the stop loss, but maybe above this candlewick high here on Monday at 356. And then let me just try to game plan this out. If we're doing a short here, I'm putting that stop loss at the candlewick high on Monday. I'll probably be targeting the lows here on September 1st. And you got yourself like a 12% move down on price here. Your stop loss is only going to lose you 3%. and your risk reward is 3.8. That's a good short in my opinion. So you have a good short, and you have also a good long here on Tau. But if you're shorting it, that's what I would be looking for. And if this is not good enough for you, if 12% is not good enough, you can put some 10x leverage on it, and you'll only be up 120%. And if you 10x leverage that, you'll be down 30% on your stop loss here. All right, moving on from Tau, let's take a look at Demo. Take a look at Demo. Demo is currently trading at 6.5 cents here. And what do we got? Demo making higher lows. It's a little bit choppy here. However, you're at the 0.236 level here. Let me try to zoom in on that, see if you can actually see that number here. Your 0.236 levels at 0.0666. Oh my god, there's that demon number again. The Damien number. You lost that though. You're actually below that, and you're coming down to the 200-day moving average, sitting at 0.0642 pennies here. I mean, you could buy here. Maybe put your stop loss below the 50-day moving average. This is interesting. So everything's like in reverse on this thing. So this is how you know you're bearish, because your 200-day moving average is the next support level. Then the 100-day moving average is below that. Then the 50-day moving average is below that. That's, you know, coming out of a bear trend. That's what a bear trend looks like when it's like flip-flop like that. A bull trend will be like the opposite, where the 200-day moving average should be below you, the 100-day is above that, and then the 50-day is above that, and then the 21 EMA, that white line, is above that. That's how you know you're in a bull trend. So we're just coming out of a downtrend in a bear market here, just because the moving averages are all flipped upside down on you. Okay, but you could be buying the bottom here. Let me move on, guys. I want to make sure that I'm break even on my Pepe long here. So let me just move that stop loss to break even on Pepe. Oh, I made some money already. Oh, look at that, huh? So in the beginning of this live stream, I was red on Solana, I was red on Bitcoin, and I was only green on Pepe. And now, you know, I made some money here. I can probably move my stop losses to break even on this now, so I don't lose any money on my longs here. So let me work on doing that here for you guys and for myself. Let's see, for Pepe we'll put at 107.5. So I'll actually, instead of breaking even, I'll actually make $1 if we crash down for whatever reason here. And let me just confirm that stop loss is in there. And then for Solana, I got in at 234.20. We're at 236, so I'll just put that at break even as well. 234, what, 234.20? So I'm gonna break even on this one. Okay. If things go south on me. And then for my Bitcoin long, I got in 115,592. We're at 116K on Bitcoin. And I will go ahead and I will put that one at break even. What was it, 115? Yeah, we'll say 115,600. So I'm not gonna lose money on my longs. That's a good position to be in. You know, when you move your stop losses to break even on your trades here. I mean, I'll lose my profits, but at least I won't lose my initial capital here. All right, what's going on here? TikTok is trying to see if I'm still here. I'm still here, TikTok. We're about to get the decision on the interest rates here soon. In like 2 more minutes, we'll be able to find out what's going on. Let me let me go ahead and go into Forex Factory here. Hey, not the liquidation, not that one. I messed that up. All right, Forex Factory. Okay. So we're waiting right now. The federal funds rate, there it is. 4.25% is what we're trying to aim for. Right now, the rates are at 4.5%. You guys able to see that? We got 50 more seconds left, and then we'll get the number here soon. So I'll just kind of wait here. It's only about 1 more minute, and I'll try to catch up on the chat here with you guys. Let's see. Miskelin says December 2024 was the peak of the bull run. Well, that was because they were cutting interest rates last year. They did the same thing last year. They cut interest rates, and then Bitcoin went from like $50,000, $60,000 all the way up to like $100,000 in December. So if they cut interest rates again this fourth quarter here, we might get another altcoin season all over again. Especially if they're going to do it again and again, like they did in September and October of last year. So here we are, guys. We are waiting. It is pending. I'm looking at forexfactory.com right now if you guys want to look at this website on your own time. But we're looking at this right now. And we're waiting for the number. It's pending. And they dropped it down 25 basis points. Okay, so we got what we expected. They were going to cut it down by 0.25%. That's exactly what we got today. And let's take a look at the markets right now. Let's take a look at Bitcoin, see how Bitcoin's reacting to that news. Looks like Bitcoin, it looks like it's climbing. It's not trying to climb. Let's see. We're going into the 5-minute time frame here. And the market's like it so far. Right now, Bitcoin at $116,300. We just did a 25 basis point rate cut just now. We're getting a green candle on the 5-minute time frame, a bullish engulfing candle here. Oh, there's my moving averages. We're finally showing my moving averages now. It looks like we got rejected off the 100-day, 100 moving average on the 5-minute time frame. Oh, do they not like the news? Is that not good enough for the markets here? And this is the kind of craziness that goes on after a federal interest rate decision. So we climbed initially, and then we dropped. Let me go into the 1-minute time frame, see what that looks like. So look at this kind of, see, this is the ridiculousness. This is how things get ridiculous on the 1-minute time frame on these assets here. So we dropped initially, then we came back up, then we dropped down again. And I'm wondering if my, I probably got stopped out of my Bitcoin after putting in that break even. Did I? No, things are going crazy though. Oh wait, did I? Yeah, this thing is taking some time to update. Oh man, did I? Did I get stopped out? I think I got stopped out of some of my positions here. It's taking some time to update. But we're looking at the 1-minute candle here for Bitcoin. This is the crazy volatility here. Market's not quite sure. It looks like it wants to go up, in my opinion. Like we came down, we stopped out some people here. But we had this last 1-minute candle here. That was a hammer candle. You got a long wick to the downside. I'm a little bit curious what Mexi's doing. So am I still in my positions? This thing is... Let me just refresh the page here. See what that looks like. Yeah, I literally got stopped out. They came and they took all my stops out. Oh my god. So I just broke even, guys. On everything. I need to get back in. I need to get back in. I like the news, so I'm gonna try to get back in, guys. Let me try to get back into Bitcoin right now. So I tried to do the right thing by putting in my stops at break even. And what did I end up getting? They came and they stopped me out. Literally stopped me out. Alright, I'm gonna open up Bitcoin here at $116,000. Try to get back into Bitcoin again. And I gotta put a stop loss in there. Let's see, stop loss. I don't like to lose more than 20 bucks, so let's try to keep it around that area. Where is the stop? There we go. Okay. So we'll say 115,500. I might have to go lighter on the leverage, but and I'm looking for $117,000 for profit here. Might take profit. Confirm that. All right. So here we are with the craziness on Bitcoin. So I was able to get in at 115,948 on that last long that I entered for Bitcoin. I still got a short that could get triggered if Ethereum pushes up to 4540. And yeah, I'm not really sure if I really want to be playing around with the stops here, because I feel like they'll stop me out right away too. But yeah, this Bitcoin, I came in. They really came in for me. They literally got me at my stop loss. Came in, took my stop, and then here we are. We're going back up initially in the direction that I thought the market was going to go. Oh boy. Alright, so we looked at Demo. We got to look at Moondang and Cardano. I want to get back into Pepe again, because I feel like Pepe was doing pretty good for me. One more trade here, guys, and then we'll look at Moondang and Cardano. Alright, so let's try to get back into Pepe. Usually I want to buy a red candle, but this thing is moving. Yeah, I think we're moving. But liking what we got so far. But things could change once Jerome Powell starts talking at 2:30. Could send the markets down again. So I don't know. This is all we're playing around here. But what do I do for stop loss here? For stop loss, I want 10700 if I can. Yeah, point 0.0000107. Or maybe the candlewick low here might be better. Yeah, let's try 10008. Alright, open the long. Let's long it. And then I gotta figure out my take profit. Can't remember what my take profit was on this one. Let me go back into the 1 hour time frame. I think it was like 11 or 1200, somewhere in that area. I'm just targeting this area back here, like 11,556. So that's going to be take profit. 0.0001156. I gotta do it like that. Okay. 0.0001156. So I'll make $98 on this Pepe trade if it continues going up in price. All right, got it in. So I got my stop loss and take profit on Pepe, stop loss and take profit on Bitcoin. And these trades need some time to cook right now. Alright, let's get back into it. So I got back into Bitcoin and Pepe. Oh, and my Solana, I got stopped out on Solana. Alright, let's take a look at the Moondang. See how Moondang is doing. And then we'll look at the Cardano. Moondang. There we go, Moondang. Let's get into the daily time frame here. So we got Moondang currently trading at 18 cents, down 4.8% today. And this is what I have for previous price action. We had an impulse move here back in May. And this is how I drew on my fib from the swing low, that impulse move, to the swing high here at 34 cents. And we're just, if you're long in Moondang, you're trying to basically get back up to this golden pocket at like 22, 23 cents here. Almost 24 cents. And we kind of did that on Saturday already. We went up to like 23.5 cents here. But I think Moondang's fine because you're above the moving averages. You're above the 200-day, you're above the 100 and the 50-day. So you can be bullish on this asset. You can be bullishly biased towards this asset. Oh, DZ. The website that I used to pull up the interest rates was forexfactory.com. Yep. Alright, going back to Moondang. Moondang, you can just plan on, as long as you're above the 50-day moving average, you'll be fine. But you can put your stop loss below the 50-day or the 100-day. If you come down there, then, you might get stopped out. And then you have to revisit and decide if you want to still be in Moondang. You can also conservatively put your stop loss below the 200-day moving average, sitting at like 12.5 cents here. Yeah, I think, yeah, 200-day moving average is sitting at 13 cents, so you can probably put your stop loss at 12.5. And if you get down to 12.5, then there's something wrong with this thing. You don't want to stick around to find out why it won't go up. I think Moondang's doing fine. We'll see how it handles itself when it gets back up to like 23, 24 cents. And then your upside target after that's going to be 28 cents. Your 786 retracement. And then let's see if we can get back up to 34 cents like we did here in May. Let's move on from Moondang. We'll take a look at Cardano. And then I'll go back into the chat to see what you guys are saying in the live chat here. Alright, so we got Cardano currently trading at 87 cents. I think the level that we were trying to pay attention to that was pretty important was the 85 cent level. Which is where that 21 EMA is sitting at. And I did have a Fibonacci that was showing it, but I readjusted the Fibonacci to like 90 cents here. Yeah, I gotta readjust this Fibonacci. So this one should be, we were looking for this here. Okay, we want Fibonacci level here. From this swing high to this swing low. So let me just readjust that. Boom, boom, boom. Okay. Alright. So, and I'll just go ahead and lock that in. So 85 cents is a 0.5 retracement level here on the Fibonacci. And that got respected very well here on Monday and Tuesday. If you're going to continue pushing up to higher prices, you could get rejected here at the 618 and 65 golden pocket, hanging out at 90 cents and 89 cents here. But if you're going to be more bullish than that, then we could end up pushing up to the 95 cent level here, which is your 786 retracement on Cardano. So I think you're targeting 95 cents in the short to medium term here for Cardano. Downside, If things aren't going so well for Cardano, we could come down to the 81 cent level. That's your 0.382 retracement. And that's this area right over here that we were trading at back in the end of August to the first week of September. I think that's going to be your downside target. You might be able to get cheaper Cardano at 81 cents. Mr. Blixen, I'm looking at the charts here, and yes, I do respond. The meeting for the Fed was just now. They lowered the interest rates 0.25%, 25 basis points, and the market's reacting to that right now. Looks like Bitcoin decided to come down. From initially it went up, then it went down, so things are a little bit volatile right now. And D2 Miami wants to look at Proppy. We could probably look at Proppy, and then I'm gonna turn the music down, and we're gonna actually look at the speech that Powell's gonna give. So let's we'll take a look at Proppy, and then we'll look at the Jerome Powell's speech, because I got that ready to go here. Right? We'll actually watch that. It's gonna be 15 minutes from now. If you stay tuned here, we'll listen to what Jerome Powell has to say about interest rates. All right, let's go ahead and take a look at Proppy for my buddy here. D2 Miami. So Proppy is a real estate related cryptocurrency. So this should do well if they're going to be lowering interest rates, you would think. This thing is currently up 9.78% today. Very interesting. Good to see. But Proppy has had better days than today. We've seen this thing as high as like almost $4 in April 2024. And you're over here making lower highs here. And lower lows, obviously, to get down to those lower highs. So, not good. You've been in a downtrend for like almost 2 years now on Proppy. However, you did get above the 200-day moving average just recently, today, and yeah, you got above the 200-day moving average today. So I can start to become more bullish, but I'm still putting this in suspect territory because it's not a clear conviction fashion. I want to see Proppy do something like this, okay? Where you get above the 200-day moving average like you did already, come up, maybe make a higher high, come back down, revisit the 200-day moving average, confirm that as a double bottom, and then come back up and launch up to higher prices. Okay, you could do that, or you don't even have to come back to the 200-day moving average. Just go up, make a higher low, and then launch up. And then after you make that higher low, then you know for sure like you're in a bull trend for Proppy. So I'd be paying attention to that for Proppy. Either you're looking for a higher low, or you're just looking for us to come back and test the 200-day moving average and then launch up to higher prices. But you can see like every time we get above the 200-day moving average on this asset, we go below it. And that's no bueno, right? We go above it, we go below it, then we come back above, then we go below it again, come back above, go below it. This is garbage. Garbage price action, okay? You want to get above it, stay above it, make a higher low, and then go up. Or you want to get above it, maybe come and test it, don't go below it, and then go up to higher prices. That's what I want to see with Proppy. But yeah, if you, if Proppy does go up to higher prices, let's turn on the VRVP indicator here real quick. Your point of control's at 93 cents. Once you get past that, the volume starts to drop off a little bit, but you have a little bit more resistance at $1.06. Then you get past $1.06 and the volume drops off steeply, and you won't get more resistance until you get up to like $1.50. That's your value area high here. That could be a target for a Proppy. That's about almost like a double in price from where we are right now if you get up to $1.50. So I think $1.50 is your long-term target on Proppy. You should be considering clicking that sell button if it gets up to $1.50. and then just figuring out where you put your stop loss. So you already made a significant move already. But if you're not leverage trading, you know, if you're not day trading, leverage trading this, then I'd probably put the stop loss right below the low here on Thursday, September 4th, where you got as low as like 67 cents. If you go down to 67 cents again, there's probably something wrong with propping. It probably wants to continue going down, and that's no bueno, in my opinion. Mario Kart drip. The Fed, they haven't said anything yet. They'll be saying something in 10 minutes from now. 2:30 p.m. Eastern time is when Jerome Powell will go on the podium, and then we'll actually take a look at that, right? And we'll watch what Jerome has to say here. But what they've done is they lowered interest rates 30 minutes ago, down 0.25%. 25 basis point rate cut. That's exactly what the market was expecting. I kind of want to go back to Mexia. I think I got stopped out on my Bitcoin trade even after I just went into it. You know, I got stopped out on Bitcoin, and I got stopped out on Pepe. Oh my god, the thing is just too damn volatile, man. Let's see. I'm gonna get back into Pepe one more time. One more time. Hit me again. One more time. What they sold me at 108.36. I came in at 109.46. Let's try that one more time. Put the stop loss below the Kennewick lows here. 107.43. I might have to go lighter leverage. Yeah, I'm gonna try to have to go lighter leverage on this. So let's try 10x leverage. See if I can stay in the trade here. And I'll make the stop loss a little bit looser. You want 107 or maybe 106. Let's try 106. See what that gives us here. I'll lose $22 on the trade, and then I'm looking for 1200. So I'll make $89 on the trade, or I could possibly lose $22. Alright, that's good enough for me. Let's get into it. Try that one more time here on Pepe. Oh my god. So I'm now in a Pepe long. 10x long, less leverage. Allows me to do a looser stop loss and hopefully stay in the trade again. And I still got a potential short on Ethereum if Ethereum does go up to 45.40. What is Ethereum doing? Let's just take a look at Ethereum real quick one more time. Ethereum's at 44.62. Yeah, I'm not gonna really do anything with that. I might just cancel the order if I'm not able to get into it. But the volatility, oh my god, it's ridiculous over the last 20 minutes here. I was in profit on all my trades, and then I got stopped out, broke even. Then I tried to get back in again, and I got stopped out again. Fun stuff. Definitely entertaining. Mario Kart wants to look at ICP. Maybe I can squeeze that in before we have to turn the music down and watch what Jerome Powell has to say. We'll look at ICP. Don't forget to hit that like button. I appreciate it if you can double tap your screen and let TikTok know we got some good TA going on here. A good live stream here. And I'm pretty sure we looked at ICP yesterday. So it's the same deal. This thing trading at $4.71, down 1% today. And this one has looked like all the other garbage altcoins out there, where it's seen its best days in December, and then we lost almost like 80% of our value here. However, this thing is looks like it's trying to bottom out. You've been going sideways since April. Yes, you've been making some highs here, but you're getting knocked down. Every time you hit the moving averages, you get knocked down. You hit the 200-day moving average, you get knocked down. You hit the 200-day moving average, you get knocked down again, okay? But I mean, since you already know how the game is played here on ICP, you can buy right now, and you're just hoping to get up to that 200-day moving average at 526, and then you'll probably get knocked down again, right? Like the same story it's been the last few weeks, few months here. That's fine. You can still make money doing some leverage trading here. And I already game planned this out. Like if you get in at like, let's see, what the price is gonna be 472 now. You put your stop loss right over here below the candle wicks low on September 1st at 458. And you're just trying to get right up to that 200-day moving average, that red line there. You got 11% gain, and you're only risking 3%. Slap on 10x leverage, that's 110% gain, and a potential 30% loss. You know what? I think I might try that. I might try that right now. Let's see if I can find that on Mexi here. I think it might be worth getting into. ICP. We're now trying to long ICP. Let's see, we'll try 6% of the account here. And we want just 10x leverage, nothing too crazy. And we're just trying to get up to that moving average, right? On the daily time frame. 526 is the take profit. And the stop loss is going to be the candle wick lows here. 460. Or, yeah, somewhere around there. $4.60. So I'll only lose $12 on that trade. I could possibly make 56 bucks. I'm okay with losing 20 bucks, so I'm actually gonna put some more margin in there. I'll do like 10% margin. So I can make 94 bucks, and if I'm wrong, I'll only lose 20 bucks. Boom. I just joined forces with you. I'm now in ICP for a long. So I got ICP and Pepe for 10x longs here. Now look at that, Pepe already in the green, making me like 6-7 bucks there, up 7% on my Pepe trade. Oh boy! All right, let's get ready to look at the Jerome Powell. I'm gonna try to turn the music down here for you guys. Actually, the music is already turned down. I guess we'll just go here and we'll see. We got 3 more minutes before Jerome Powell shows up. Let me go back into the live chat, see what you guys have to say about all this craziness in the last 20 minutes. Mario says we need to go up right now. I'm right there with you. And you're new? Oh, so you... We had another guy request ICP yesterday. But if you're new, I'm glad you came in, and I appreciate you hitting the follow button. We try to go live every afternoon around like 12 to 2 p.m. Eastern time. I started a little bit later today at 1 p.m. because I knew like we were gonna have the Federal Reserve and they're gonna go, tell us their opinions and thoughts about interest rates around 2:30. So I was like, you know what, let me go live. I'll go live from like 1 to 3 p.m. Let me see. DZ also in the chat here. Yep, Jerome Powell is gonna be talking soon. And I'm going to be live, yes, during Jerome Powell's speech. We're going to try to see if we can watch him give his speech and what might come next year with interest rates. Alright, let me see. Let's try to catch up with what you guys said here. Miss Colin, are you still in the chat, Miss Colin? What do I predict where rates will go? I think they're all planning on rates going down below 4%. Yes. Like we might get like another 50 basis point or a 75 basis point rate cut from where we are right now. I think they'll try to drop it from 4 to 3%, somewhere down to maybe 3%, like high threes, like 3.75% maybe. All right. So I'm just waiting for Jerome Powell to get on here. We got 1 more minute left. 1 more minute and then Jerome Powell starts talking. And he usually shows up right on time. He's pretty good about getting to the podium right away. But man, oh man, these markets, huh? The last few minutes here. That's why some traders, they avoid trading in the markets when the Federal Reserve is making a decision on interest rates. You don't have to avoid it. You can still trade, but one thing I would say is use smaller positions and use less leverage so you can stay in your trades. Because you saw how I got knocked out of my trades there. I broke even on my trades, but I could have probably still been in them if I had less leverage and a looser stop loss. But hey, it's all part of the game. All part of the game. And it could have went one. It could have went one way. We could have immediately went to $117,000 on Bitcoin. I'm just looking at the 1 hour time frame here on Bitcoin now. See that nice little candle taking out the longs and their stop losses, taking out the shorts and their stop losses. Oof. We got as high as like 116,384 on Bitcoin about like 20 minutes ago, and then we came as low as like 114,900. Oh my god, it really took out all the longs. I wouldn't be surprised if they end up launching us up to higher prices, after taking out that liquidity to the downside, and now they're going to try to come after the shorts who think they're cute with their stop losses higher than what they were able to catch them at. I wouldn't be surprised if we pump up to like 117K now. We're just still waiting for Jerome Powell to show up. Oh, I think he's coming on. There he is. Alright, let me go turn the music off. Music off. Jerome Powell on. There we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of this slowing likely reflects a decline in the growth of the labor force, due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed.
Don't say that.
Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Well, guys, I think we got what we wanted there.
Great. Thank you. Chris Rugaber at Associated Press. As you know,
Don't mention
Fed Governor
QE,
Stephen
though.
Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time
Sounds like
I believe the
they're gonna be
Fed's
doing more
board
rate
has had
cuts,
someone
too.
with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
Why are we talking politics?
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Thank God. Next question, please.
Oh, I'm sorry. Can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible and that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little
Appreciate you
growth,
guys
if
hitting the
any,
like
in the
button
supply
there,
of
guys.
workers.
Thank you.
And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. But what we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point
Bitcoin
cut
not
today.
liking
You know, I
what it's
think
hearing now?
we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith for the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change?
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP,
I'm not sure if
actually,
you want to really be shorting Bitcoin at these levels here.
the projections for
unless
growth
you're,
this year and next
long-term
actually
bearish
ticked up
on
just
it.
a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see
The short
a
would have
very
been
different
earlier
picture of the
today,
risks to the labor
or last
market.
night at
You've seen,
117K.
we were looking at
Good short entry.
150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target
If
until
it's
2028.
a sell the news event,
so I guess
then
I'm
you
just
could
wondering how
probably,
you characterize the
short
risk to price
Bitcoin now and
pressures
take it
of
down to
kicking off a series of
112
cuts
or
at this point.
113K, but
Yeah, so I would look at it
Seems
this
like
way.
that's already happening right
we
now.
fully
We're
understand and
dropping right now on
appreciate
Bitcoin.
that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So that's what I meant by that.
I think a follow-up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened.
Catching some bids
so
right now.
the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
It is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
It's
so we got the
deeply
interest
in our
rate decision
culture
here, guys.
To do our work based on the incoming
Bitcoin
data and
is dropping down
and never consider
over the
anything else. That's just
last 30 minutes
everybody
here,
who's at the Fed
especially
really
with Jerome
feels
Powell
strongly
coming
about
in.
that way. So you'll know it by the
we
way
got
we
exactly
talk
what we
about
wanted,
what
but we
we're doing,
didn't get
by
more
the
than
speeches
what we
that people
wanted.
give, by the decisions that we make. You'll know that
We got the
just
interest
still
rate
gonna do
cut,
that. That's all we do.
But they didn't do 50
and we
basis
don't
points. They
frame
didn't do
these questions at
quantitative
all or see
easing,
them
and
in
there's still
terms
some
of
uncertainty about
political outcomes.
inflation,
I think
which
when
they
you get to
mentioned.
another part of Washington, everything.
However,
is
they
seen
do
through
highlight
the
the
lens
fact
of does
that
it help or hurt this political
Federal
party,
Reserve
this politician.
is paying
That's
attention
the
to the labor
framework, and I
market is
think
weakening
people
right
find it
now.
hard to believe that is not at all the way we think about things.
But it sounded
At the
like
Fed,
they
we're
were
taking
open
a
to the
longer
idea of more
perspective.
interest rate cuts.
We're trying to,
So,
serve the American
the
people
market
as best we
did
can.
we did get a little green candle
I
when
think
they mentioned
I think
that.
you would be able to tell. I
But
don't believe we'll ever get to that place. I would say
We're still waiting.
We're doing our work exactly as we always have now.
Get back
And
to
people are
listening
they're
here.
making their arguments, and we're having a great discussion around these challenging issues. So
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
Now we're talking about court cases.
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work.
I'm going to try to
to the extent we have issues around
we'll
data
do
right
this
now,
last
it's
question
about
here
low
with
response
Jerome
rates.
Powell, and then I'll finish
That's
up this live
happened
stream here, guys.
all over, really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But if for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action. And we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. The black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You know, you see minorities, unemployment going up. You see younger people who are more vulnerable economically,
on the 1
more
minute time
susceptible
frame,
to
maybe?
economic cycles. That's one of the reasons, in
Bitcoin.
addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all this together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment.
Possible bear flag here on Bitcoin, maybe
side,
taking us down to 113,700.
Do you feel that that's an unsustainable mix for the economy moving forward?
All right. Let's cue the music here. All right. So we got the interest rate decision here for Bitcoin. I mean, not for Bitcoin, for the Federal Reserve. And it's affected the price of Bitcoin, obviously, to the downside. Market's treating it like a sell the news event, as far as I'm seeing it. We didn't get anything that would cause us to get excited, besides them saying that they are open to the idea of further rate cuts if the job market weakens, and if they can make a determination that inflation is no longer an issue. However, right now, inflation is something that they are still worried about. And right now, they're saying that they're worried about inflation and they're worried about the job market. So Bitcoin kind of like trading basically where it started today. Let's see. No, we actually started the day a little bit higher than that on the daily time frame. We actually opened. No, actually, no. Yeah, we're actually at 115,300, and we're basically where we were at yesterday. It's like this whole up and down price action didn't really mean anything. So, I mean, I understand why Bitcoin is back to where we started, because we got exactly what we were expecting, and they're still worried about inflation, and they're still worried about the jobs market, and they're not giving us any clear, convincing evidence as to like what they're really worried about, because they're keeping us in limbo land here. So I guess it's just more of the same. But if jobs market keeps weakening, then you expect another rate cut next month, and we'll get information tomorrow. We have unemployment claims. Let me just take a look at this real quick here on Forex Factory. We have unemployment claims. Last week they came in at 263,000. They're expecting 241,000. If we get a number that matches that, maybe not so bad. But if we get a number that's more than 240,000, then that probably will give more credence that they might do an interest rate cut next month. So pay attention to tomorrow morning around 8:30 a.m. Eastern time for unemployment claims. That's an important number to be paying attention to here. And that should affect the price of Bitcoin and cryptocurrencies as well. And then, I know we still have a jobs report coming in for the first week of October. We'll see how that does. That, you know, if we're still losing jobs, then we'll mostly get an interest rate cut. And unfortunately, all the people's pain ends up being gains for Bitcoin, because Bitcoin will actually go up if unemployment is going up. But right now, it's you know, there's some volatile action here. Let's go into the 1 hour time frame here. You see that we had some candle wicks to the high. We took out the shorts, we took out the longs, and we're pretty much back, almost back to where we started. Around like 1 o'clock, you know, in the afternoon here, we closed at $115,576, and then we had this crazy action here at 2 o'clock. But now here we are at 3 p.m. Eastern time. We're basically back to the same price that Bitcoin was at before the Federal Reserve interest rate decision came in. So almost like a nothing burger, but it took out the leverage longs and the leverage shorts. Like the leverage longs got taken out and the leverage shorts got taken out. I got taken out in some of my trades. Break even on most of them, but I did have a nice solid profit that I gave back today because I want to stay in my trades. But looks like the market's now trying to catch some bids here. Let's go back to the 5-minute time frame here. So Jerome Powell, I'm assuming he probably stopped speaking, right? Is he still speaking?
I wouldn't say that. I mean, you're right.
Let me just move this to live. I don't know. They're talking about something here.
Mostly being paid by really the companies that sit between the.
But right now, I mean, the market's just going back to where it started before he even spoke.
Sell it for retail, or you use it to make a product.
Like it didn't even mean anything.
Taking a lot of those costs.
But we'll see. We got the moving averages to look at here. I want to see the price of Bitcoin get back up above the 200 moving average on the 5-minute time frame. That red line.
Entities in the middle, they'll tell you that they have every intention of
let me know that we can continue being bullish here. But if we're going to get rejected off of these moving averages and go to lower prices here, it looks like the next stop for Bitcoin to the downside is this bear flag that I saw us. I thought we were creating a bear flag here, but I think the next stop is going to be 113K for Bitcoin.
Share with us.
Let's go into the 1 hour time frame.
Consider leaving the Fed in
no, I think it was like 4 hour time frame. 4 hour time frame has the moving averages below us, where we could see Bitcoin come down to 113K. Where that 200 moving average is sitting at.
With Bloomberg News. I just wanted to follow up on.
So, I think 113K Bitcoin could still be in play if the market wants to send us to lower prices here. I see Ava Medina in the chat. Good to see you, buddy. You think now's the time to buy? Yeah, I thought we had some buying opportunities this morning. It looks like we got some more buying opportunities this afternoon. I didn't hear anything to scare me. I don't think Jerome Powell is going to scare the market to go lower. The market could still go lower, but I don't think there was anything scary about that speech that he gave. Okay, they're just saying that they're still worried about inflation, but they're also worried about the jobs market. And they gave us a little hint that they might be lowering interest rates if the jobs market continues to deteriorate. So it's still that if. They're not going to give you a solid answer, but they're going to kind of lead you in the direction as to, like, what they might do if certain things play out a certain way. So I think we're fine. I think we're fine here. I think this could end up being a buy in the dip opportunity. I wouldn't really be shorting Bitcoin. If you are trying to short Bitcoin, I still think you could try to throw your hat in the ring at $117,400. We almost came up to that price earlier in the morning, last night. We got to like 117,300 here on Coinbase. Not quite the level. I was ready to short Bitcoin last night myself. I was waiting for 117,400. It didn't hit. I missed out on that potential short, but I was ready to short. And that $117,400 level is the level that we've seen back here. We got up to here on Friday, August 22nd. That's the level that I am keying on. Also back here in August 7th, we got up to that same level here at 117,400, 500. And we kind of use it as support here in the middle of August as well. So I'm looking for that level. If I'm gonna short Bitcoin, I'm looking to see if we can short it over in that area. And then you just put your stop loss tight at like $118,000. And if you're wrong, you're not gonna lose that much money. But if you're trying to short Bitcoin, I will wait until this level here. If you're anxious to get in now, but if you're anxious to get in now, just know that this thing could push us back up to 117K all over again like we did last night. But guys, that's going to be it for this live stream here. I appreciate you guys coming out, checking out the Federal Reserve meeting here. I've been live for about a couple hours now, and I gave you my thoughts here on Bitcoin. I think we can still remain bullish on crypto. We got the 0.25 basis point rate cut. I think a 50 basis point would have scared the markets that that things are worse than what they were expecting. That they don't have the economy under control here. So I'm glad they didn't do that. We can always cut rates again next month, right? We still got next month that they can cut rates. And they can do it again in December as well. So I like what I heard today. I think the markets are starting to come to their senses here that they're liking what they're seeing right now, because the Bitcoin's going back up to 115,800. And I'm interested in getting in some trades here, guys. So I'm going to end this live stream, but tune in tomorrow. We'll try to look at the charts one more time. 12 p.m. to 2 p.m. is when I usually go live, between 12 to 2 p.m. Eastern time. And yeah, we'll see what the markets are giving us for tomorrow. Take care, guys, and good luck trading and investing in whatever asset you decide to get into.